See what's going on. Okay, so we are officially live. I'm pleased to have Andy Hoffman, our director of marketing for Miles Franklin, join us. And so it's been about 2 years since we've last spoken, and since that time, a lot has happened. And so, welcome to another episode of RTD Live. And so, Andy, appreciate you joining me and sitting down with me today.
Yes, I appreciate it. I've followed a lot of your other podcasts over that time, and I'm happy to be back here.
All right, got a little feedback in my ear here. Gotta mute that. Okay, sorry about that. So yeah, trying to work out a couple technical issues here, but once again, looking forward to diving into a lot of stuff. I actually just recently listened to your All-Star Panel webinar, and so you did a great job with David Morgan and Steve and Craig, and so definitely looking forward to touching on some of those things as well, because a lot of my audience is more geared toward the millennial, those that are less informed. So I'm gonna try to keep it as simple as we can to help others understand the importance of precious metals and how it all ties into world events that's happening right now. So I want to get into some questions. I got a whole list of questions, and as always, I want to open it up to the audience to call in and ask questions if they have any. And so the first one, Andy, is we're 5 months into 2017, and so give me your thoughts on what's concerning you, what scares you, what excites you with the global market, or just anything in general. Open up, let us know what's going on in your mind.
What excites me? I'll leave that to the end. A lot scares me, and it's not just what I do for a living. It's I've been researching politics, economics, monetary situation around the world for 15 years now, and never have I been more worried about the state of where things are. The way I put it, we're in the terminal phase of history's largest, most destructive fiat Ponzi scheme, and that's why again. You have all this hype about the financial bubbles being blown in what I call last to go markets, like the Dow Jones propaganda average. But aside from that, I mean, it's unquestionable that the amount of global trade is the lowest of our lifetimes. And I mean, I'm talking about well below that of even the 2008 crisis. And the trends, the debts are exploding. You've seen serial currency collapses. You now have the political and social ramifications, all these votes like the Brexit and Trump. And, we're at the point right now where the Ponzi scheme has to inflate dramatically. Look at what the ECB has done this year, what the Bank of Japan has done this year, what China has done with their credit creation. So really, all that's left is, the catalyst that causes the Fed to have to join the party too. And at some point, it's going to happen because, we are definitely at the end of a Ponzi scheme where the debt explosion is about to go, thermonuclear.
Thermonuclear. Now, let's talk a little bit about the Fed, since you hinted at that. There's been a couple quarter point interest rate hikes every now and then. Does that even matter anymore? Or is that just, just talk, or just something to distract people from the bigger issues going on, such as the global, the debt that you just mentioned?
Well, if you're talking about in terms of precious metals, of course it doesn't matter. There's so much propaganda and fallacy out there, by powers that be that are desperate to keep people in their line of thinking, a line of thinking that keeps them in power. I mean, the fact is there's no historical correlation between gold prices and interest rates. In fact, not only has gold gone up every time that interest rates have gone up in the last, 30 plus years, but every time that they've raised interest rates the last 3 times, and yet they'll still come out and say, oh, the Fed's going to raise interest rates, it's going to be bad for gold. And again, is it material? Of course it's not material. The average federal funds rate over the past 70 years, since there's been a federal funds rate, is like 6%. So when they go from 0 up to where it is now, which is 7/8 of 1%, and they try to tell you that this matters, again, and the debt, the debt back in the 1950s when it was 6% in 1960s was nothing. Now the debt is 19 trillion plus 5 trillion off balance sheet, plus all the unfunded liabilities. Plus, I mean, look, you're talking about Trump's like, oh, I'm going to do a tax cut. Oh, it'll cost $2 trillion, but don't worry about that. I mean, who do you think is going to pay for that? It's going to be paid for with printed money, more debt. So again, the point is that these interest rates are completely immaterial, and the only reason they do them is to save face, knowing full well that they have the PPT supporting the stock market, because that's all they care about. They don't care about the economy, and certainly these tiny increases in interest rates aren't going to change the economy. They just want to know that if they do it, the market won't crash. And as soon as there's any worry that the market might do anything against their wishes, then they turn tail and all of a sudden become dovish.
Right. What's most alarming to me is the fact that since the rates has been basically zero, And when it comes to saving and just getting basically returns on your deposits has been non-existent. And so we've been ushered into a cash back society where they encourage us to spend more in order to earn more. So I would have never imagined that we'd have been incentivized to spend more money to get cash back. And so recently or last year, I got a statement from one of my little accounts or whatever. It said you've earned $200 or $300 dollars off of your yearly spending, and so that means I spent $200 or $300 off of 3 or 4 or 5,000 off that account. And I'm like, I would have rather have saved that money and received $200 or $300 or $400 on that, but yet those days are gone. So do you see the days of being able to save in fiat paper coming back where you can actually earn something on it, or that's not going to happen no time soon?
No, of course not. I mean, you're talking about negative interest rates where where black is white and white is black. You're supposed to be happy that your bank is taking your money. This is a good thing somehow. And I mean, look at the countries that have done it in Europe and in Japan. They've been complete disasters. And I mean, how could it not be? I mean, if you made $200, you probably have a $2 billion bank account at this point. Because the one thing is the Fed raises rates, but amazingly our bank accounts don't go up. The rates don't go up. So it's not helping you. And the only way they want you to save, quote save, by putting money in .com valuation stock markets that they support. That's what they consider saving, which of course is eventually going to come back and kill you. And most people don't even have money in the markets. It's only been I just read about this. It's only been the last 6 months or so with the retail public, which was destroyed in 2000 and again in 2008, has returned to the markets. I read that Charles Schwab has been opening up stock markets at a pace not seen since the top of the .com bubble. Now, this is when they are coming in. And the same thing happened, by the way, a few years ago at the top of the Chinese stock market bubble, which burst. I mean, it was like 3 or 4 years ago. And so again, the malinvestments that have been caused, the thought malinvestment that's been, people are just, it's crazy. What people have no idea how the world works anymore. They've been so turned around and twisted by all the propaganda and rigged markets and the dependency on welfare because of the distortions that these rigged markets have created, that it's almost like even a lot of the smartest people just have not a clue anymore about what's going on. But what people do know is their personal situation. I mean, Main Street knows what's going on in their businesses, and the average person knows that their cost of living is going up, and it's not getting any easier to get along in life and make ends meet. So the increasing understanding of this by the vast majority of the world is starting to finally occur, which is why you're having all these these political regime changes, and it's only going to get worse.
Right, I do agree, and I want to, I should chime in on that. And I noticed that there's a lot of, like people's personal economy is being impacted because you have all the retail stores closing. And then I was just recently watching an article, a sports article, and it mentioned how viewership for the NBA playoffs right now is down, and I think football viewership was down. So a lot of people are not even really watching sports anymore, and sports has always been a way to get away from the heartaches of day-to-day life. So it's clearly that a sign that people are conscious of what's going on now and more concerned with their pocketbooks because they're not making much money now or not purchasing much. So I want to get into the next question. Actually, want to open up. We have a couple people watching, and so anybody have a question at any point, feel free to call in. The Skype user ID RTD Live is above my shoulder, and call in and ask a question or chime in or share your thoughts at any time. Love to hear from you guys. And so, Andy, want to move on to the next one. During your all-star panel, you guys kind of touched on supply and demand of physical gold. And so I heard various viewpoints from everybody. Share me yours. Is there enough precious metal to come out of the ground to support the demand that's going to be coming in the days ahead, or no? Or right. Break it down for us.
Well, this panel was a silver panel, so that's what we were focusing on in this. But in fact, I was writing about gold today, perfectly timed, because if everyone could look at their screen at the stock of Barrick Gold ABX, which is down over 10% today, because they put out an earnings report saying that production is going to decline. And now, back in 2015, I wrote an article. The title was something like "Earnings Guarantee." The earnings that are coming in guarantee peak gold. And sure enough, gold production absolutely peaked in 2015. There's a chart in an article I wrote in December called "The Most Gold Bullish." The most important and gold bullish chart you'll ever see, showing that even the mainstream, we're talking about S&P and Credit Suisse, are now projecting 20+% declines in gold production over the next decade. And this is while, oil production is exploding, and copper production and wheat production, everything except precious metals, because of the manipulation that has suppressed. I mean, one, they're precious and they're becoming harder and harder to get out of the ground at reasonable cost, but mostly because the suppression of price has killed the mining industry. And what I write about in today's article, I think it's called the future of money and storage of value. I'm showing how the mining industry has been decimated by this lack of capital. They've built up debt. They've issued tons of shares, and yet their production has plunged and the reserves have plunged, and there's really no hope. What we were talking about on the All-Star panel about silver, there's really no hope of in silver a material increase at all. Right now, silver production also peaked, and we're not sure how far it will fall, but it is going down. And gold is definitely going down a lot. So again, we're talking about demand in the world is as high as it's been. Inventories are as low as they've been, and supply is going to go, if anything, down.
Right. I think it was during our same conversation. I think David Morgan chimed in and mentioned that it's kind of coincidental, or I wonder if it is, that the current price of gold and silver right now is relatively the same cost for the most part as it is to get it out the ground. So do you think that it's something that they have done on purpose to try to keep it there, or they haven't been able to get it down to where they want it, probably would like for it to be, which is well below 1,000 or 1,200 and well below, say, $10 an ounce for silver? So do you think we're kind of stuck at those prices for now until there's some type of breakout, or could there be a move downward?
Well, that's a perfect layup, and I'm going right to what I just wrote in this article today. That's exactly what I talked about here, and I'm going to read it just because your question was so coincident. And I said, here we go. To wit, in our seminar that we talked, it was noted that despite the heinous price suppression of the past 6 years, the cartel has been unable to push gold below its cost of production, no matter how hard it's tried. To that end, per the below chart from Steve St. Angelo, who's on the call, the cartel has never been able to achieve this goal all the way back to the bull market start at the turn of the century. Similarly, in the silver market, where he estimates the current cost of production to be around $16 to $17, not including all-in costs. And I said, I'm talking about Barrick and Newmont, which in 2015 had a cost of production of $1,116 per ounce, which I'm sure is higher by now. That was in 2015, and these are the two largest producers in the world, number one and two. So arguably, if their cost is 1116, the industry cost is a lot higher than that, for because they own the biggest, best mines, and that doesn't even include the all-in cost, meaning the cost to replace your reserves and increase production, which they haven't done. So I would say that on average, the industry cost for gold of production, forget all-in costs, is got to be, I don't know, $1,300, and the all-in cost is probably closer to $1,800. And for silver, if he's saying it's $16 to $17 for the big producers, well, it's going to be, let's call 18 to 19 for the industry, and it's going to be a lot higher than an all-in cost. And what you're talking about here is they can't seem to get the price below the cost of production, and so we're there right now, and that's why I don't have any worries, because I'm sure they would love it to go down a lot more, and they wouldn't have to constantly attack it to make it, to prevent it from breaking out above these trend lines. But they can't, because demand is so high and physical supply is shrinking with each passing day.
Right. Now, if you're a miner yourself and you're in business to actually make a profit, at what point would you say, okay, let's hold back? We're not really making a profit. We're more so breaking even-ish around there. So, I mean, isn't it, inevitable that eventually they're going to either, save a little bit for themselves and wait for a price breakout, or just stop supplying altogether? You think that's a possibility?
No, it's not. In fact, the only company that ever did that, well, there's two, okay. The only one that really mattered was Goldcorp way back when. I'm talking about way back when Rob McEwen was running it like 10 years ago, did that for a tiny amount of time. And they had to stop because the board of directors said, you can't do that. That's not what shareholders want. They want us to have cash flow. And that was the last we heard of that. And then, you had Keith Neumeyer had said, First Majestic, he did it for like a quarter and then he stopped. It's like he stopped all production. He stopped a tiny bit symbolically. The point is, he can't. Even First Majestic, everyone, oh, it's the greatest company in the world. There's nothing wrong with them. They need the money. Everyone needs the money. So I'm saying the debt in this industry is exploding, and plus they have agreements with their suppliers. they have what's called offtake agreements. So they have to supply the metal unless there's a force majeure. They can't say, oh, we're not going to give it to you this quarter. They have to. But more importantly, they need the money. And you don't have any guys like like Keith Newmeyer, other than Keith Newmeyer, who has any interest in maximizing shareholder value. Most of them are just scared of fighting the system because they, some are clueless that the system's fighting them, and some of them that do know are too scared to fight it. So no, the mining industry has nothing to do with it. The mining industry is doing just fine helping the gold and silver price by running itself into the ground, which is why we're going to have lower production. So there's going to be no outside source that's going to save the industry. What's going to happen, and is happening now, per what we just talked about, with the price having pretty much a floor under it, is that the supply is falling and demand is rising, and the inventories are down. I mean, look at the COMEX inventories; they're down to nothing, gold and silver. And it's hard to gauge how much is out there. The rest of the world, it's so opaque. But look, when the Germans ask for gold from the Fed, and it takes them 3 or 4 years to get, which should take a week to get, and then what they finally wind up getting is not the same gold they put there. That there's just not a lot out there. Why has Fort Knox not been audited in 70 years? Why? Because the gold is not there. It's been encumbered or sold or swapped or leased, and there's been plenty of official admissions of that. It's not like this is conspiracy theory. But again, this this manipulation scheme is on fumes. And the reason I know is because the supply is now plunging, just like the debt of the world is exploding. I mean, that system, no matter what they try, no matter how they manipulate fiscal policy and monetary policy and the media, the fact is things just keep getting worse for them, and things keep getting better for the fundamentals of gold and silver.
All right. I want to also comment on that. One of your articles I was reading, you mentioned about the global phenomenon. Because getting back to debt and things like that, on I guess the massive amounts of monetization of debt and in the form of QE. Now, so that's a lot happening out with Europe, and they're going to continue that on. Now, as the U.S. continues to go through, a unreported recession. Another thing, do you think we actually are in a recession right now, or not quite there yet?
Well,
let's try to cover it up or paper it up.
Let's see. We have like every imaginable hard data. Is one of these that, like as Zero Hedge will put it, the only time we've ever had such bad data where we're not in a recession, like a 20-month decline in industrial production or retail Armageddon. All these things it's never happened before outside of recession. But now that we have double seasonal adjustments and we add all kinds of manipulations of the GDP data, we never have a recession. And even then, we're at, the Fed is predicting 0.5% GDP growth this quarter, which would be the lowest that we've had in, 2 years. And yet we got the Fed on the other side of their mouth saying the economy is so strong, we're going to be raising rates. So again, I mean, none of this stuff computes. Of course, we're in a recession. Just the retail Armageddon alone should tell people that. Even, look at the oil price plunging despite all of the efforts to pretend that demand is up and supply is down. There's just too many things that they can't control. The one thing they can control, however, or the two things, are the stock market and the paper, gold, and silver markets. And for now, they've been able to master that art of masking reality with them. But, with each passing day, the chinks in that armor are being shown. And, when Donald Trump gets elected or the Brexit occurs, or let's hope that Marine Le Pen somehow winds up winning. But clearly, even if she doesn't, the fact that the two main parties in France are out of the running shows you the people there are pissed off too. And I mean, and then you look around the world at what's going on in these various nations: Spain and Italy and Turkey and Argentina and Venezuela, Mexico. So again, you can only mask reality for so long. And right now, with each passing day, less and less of that reality is able to be masked.
Right. Good point there. Now, since we are, quote unquote, statistically, graphically, everything like that in a recession, it hasn't been revealed yet, and hasn't really been, the side effects of it hasn't really been felt yet as far as the next round of probably QE. And so when the stock market does its adjustment for all the things happening around it, do you think there's going to be a massive amount, and how will that be introduced? And just play through some scenarios of how, when it's officially announced that that monetization of debt is going to come, what will it look like, and how will it impact us directly in our pockets perhaps?
Well, this is like the most interesting question of all, because I truly believe that the powers that be have now mastered the art of supporting the stock market. I mean, I wrote Dow Jones Propaganda Average 5 years ago, showing the dead ringer algorithm that is used on the stock market pretty much every day. I mean, it gradually rises throughout the day. It bottoms at 10 o'clock, which is, the Eastern Standard Time, which is the Fed's open market operation. So, I mean, yeah, I mean, I guess they could run out of shares to buy, which is becoming a problem in Japan, but theoretically, they may never have to let the stock market go down. But the problem is trying to make the stock market go up every day when this Main Street world is falling apart at a more rapid rate than ever, not just here, but overseas, is the big trick. And, eventually something is going to catalyze the Fed's need to monetize. Look, we're talking about apparently we need this massive tax cut, which the problem is it's unfinanceable. And so when Trump comes out and says, well, I'm going to take the corporate rate down to 15%, which, by the way, the math says 95% of that benefit would go to the top 5%. So again, it's rich getting something from the rich, but it's not funded by anything. It's not funded by, I mean, I don't think it'll happen because of the fact that there's no spending. But let's say it was. Okay, we're going to have this big tax cut. Remember, the stock market's up because we're going to have a big tax cut. Okay, we have a big tax cut, but it's not funded. Well, you got to fund it with something, so it's going to have to be more debt. And who's going to buy the debt since since the Chinese are now sellers and Japanese are sellers and the Saudis are sellers? It's going to have to be the Fed. I mean, someone has to buy the debt. So, by hook or crook, that monetization is going to have to go from the covert way that it's being done now. They're just letting, they're like, we'll let the ECB and the Japanese, do it covertly, overtly. We'll just do it covertly for now. But eventually, some kind of crisis, and not necessarily a stock market crisis, is going to force their hand, to force them to say, yes, we're no longer in the business of pretending that we're going to tighten policy. We're going to have to be overtly easing. And when that happens, it probably will accompany financial market distress of major kinds, whether it's stocks or bonds or currencies or commodities. But either way, it's going to catalyze, the end to this paradigm of lies, and it's certainly going to put the gold cartel out of business.
Right. Now, what you hinted at the fact that someone has to buy it. Now, we've already, come across a lot of things that will be unimaginable, such as 0% interest rates, NERP, and, just QE itself just been a concept that I'm sure, 50 years ago would have been not even been, imaginable. So what will prevent, the Fed or our government from basically just saying, hey, we're not going to issue bonds no more? Whoever the chairman the person at the time is, just, hey, just print us a trillion, just give it to us, because you're in charge of our money supply. You're our national bank for the most part. Just give it to us, and we'll work it out sometime down the future. What can prevent them from doing something like that, perhaps?
Well, Obama did propose they did it as a trial balloon, but they meant it, the $1 trillion platinum coin, right? That they were going to do. I mean, all they need is 20 of them, and they could pay off the debt. So, at that point, you're talking about, Venezuela style. I mean, yes, the Venezuelan stock market went up a lot, but then you're talking about complete loss of confidence in the currency. And there are some things that they can't control. They can't peg the value of the U.S. dollar to whatever they want when there's billions of people in the world that are buying and selling dollars. It's one thing to buy stock futures or naked short gold. Naked short gold until they run out of physical, until people start demanding physical. But you try stuff like that, and I assure you, the dollar would collapse. But of course, they wouldn't have to do that until after other currencies have already done the same thing. After the euro is banished and the Japanese yen has fallen into the sea. So we'll be the last to go. But believe me, it's going to happen. But the bad currencies, they start at the bottom and they die one at a time until finally it moves up the totem pole and gets the dollar. So we're going to continue to see our purchasing power decline. But it's not going to be until everyone else has seen their own currencies destroyed before we completely destroy ours.
Right. And speaking of purchasing power, one of the viewers of watching right now mentioned that, nothing will happen until it's a loss in the confidence of the dollar. And then I want to hold this up right here. And so this is something I put together for a video I did recently. Can you see it, Andy?
Yeah, Trump's the only one whose chin went below the bar.
Exactly. So watch this. So my question would be, if you've seen this trend over the last 100 years, what would make you think that confidence has already been lost, other than the fact that it still spins, but yet, just a downward spiral in and of itself is a reflection, or should be a reflection of true confidence in the Federal Reserve note, being that it's basically at zero, and whatever Trump does is going to take it probably below zero. And then what will that look like? I mean, that will be the ultimate loss of confidence in and of itself. But just to reply to what Tony said, nothing will happen till confidence is lost. My confidence already has been lost. So that's yeah.
Well,
so,
yeah, I don't own any more dollars. I have gold, silver, I have Bitcoin, I have my house. I've lost confidence. But again, it's when I talk about loss of confidence, I'm talking about that's the free fall stage where people don't even want dollars anymore. I mean, the fact is the loss of confidence is reflected in the fact that people are suffering. The cost of living, no matter how they measure it, they can say that the CPI is up or it's down. The cost of living has exploded. And in many ways, it's exploded because of the bubbles that they've created, because most of that free money's gone to the banks. They've created a massive real estate bubble relative to the incomes and savings of people, to the fact that to the point where people can't afford houses anymore and rents are at all-time highs. And, the healthcare reform has caused healthcare costs to explode, and they're desperately trying to support oil prices and made oil prices go up when they shouldn't go up. So, and then they mask a lot of the inflation with things that they don't count as they'll give you fees and taxes, fees and excise costs and surcharges that they don't count as cost of living, but they are there. I mean, no matter what you do, everywhere there's always increased costs, and so people are suffering, and that's why the middle class is dying, and why the average American has little to no savings, and why the millennial generation is starting to give up because they can't afford to get a good job or own a house. The American dream seems increasingly distant. That's why first they fight back by voting for Donald Trump, and then they fight back in other ways, and they see what other people in other countries are doing to fight back. Because again, it's the kind of thing where, especially when you're here in America, where the dollar is still the reserve currency, so it doesn't decline as much as the other currencies around the world, you kind of get masked from a lot of the things that are going on around the world. Things are bad for yourself and they're getting worse, but you can't imagine what it's like for the other 7 billion people in the world whose currencies have fallen much further, like the euro. I mean, the euro is almost hit a 15-year low a month ago, and now it's they get all excited because it's up like 2 cents because maybe Le Pen won't win. But if she doesn't win, well, you're going to get another guy, a guy who worked doing like what Obama did, or Francois Hollande, his boss. It's only going to make things worse, and eventually the people will lose total confidence in their currencies, and they will fight back and secede, and it's just a matter of time. Different countries at different paces.
Yeah, and I would agree. Total confidence will be the time where, like you see in a lot of those pictures from nations where the currency collapsed completely, where they're using it to, use the bathroom with, or it's in the streets, so that'd be the total collapse right there. But yet at that point, I imagine they'll have some type of, substitute to issue us, or maybe perhaps in some type of digital form. So let me touch real quick on the digital aspect, and also got more people watching us. And if you want to, if you're brave enough, give us a call. I would love to hear your voice, or just ask a question to the right of the live chat stream. Yeah. And so other than that, I'd love to hear from you guys. And so we're going to actually move into the next segment, Andy, because I know you time-wise, I want to keep you here all day, but we could probably talk about all types of things. But this next section is going to be called What Comes to Mind when you hear this word. And so I wrote down a list of words here that I want to get your thoughts on. And it's surrounding some of the things actually, around me right now. And so it's a cryptocurrency. And so Bitcoin and Ethereum. Give me your thoughts on those. Are they something to speculate with, invest in, or what's your thoughts on the whole Bitcoin crypto coin stuff?
Right. Well, anyone who follows me, and I am the marketing director at Miles Franklin. We're one of the largest bullion dealers, and I write every day for free. Knows that within the bullion sector, I am unquestionably the leading advocate of Bitcoin. I believe in it. I've written multiple articles. One's called the future, well, today, the future of money, why Bitcoin will make gold and silver go up, Bitcoin and precious metals, twin destroyers of the fiat regime. There's one called Same as It Ever Was, Bitcoin and gold in a changing world. I believe that the future of money is cryptocurrency, specifically Bitcoin. I mean, look, it could be something else, but if you're talking about the current crop that's out there, no, I don't believe in Ethereum. To me, Bitcoin is physical gold, and all the other altcoins are mining stocks. Most of them are junior mining stocks, and you
Now,
can,
let me ask you a question. Why
yeah.
physical gold? Is it because it's the most popular? It's kind of the first and leader of its class? Because another question was from a guy named Jesse James. He wanted me to
Yeah.
ask you about, why do you think that the powers that be allows cryptocurrencies to, tag alongside their fiat paper currency? Was it by design, or is it some type of hidden agenda with it? Or what are your thoughts with that one?
Well, yes, Bitcoin has been around almost 10 years, and it has this massive network effect. It's to say it's bigger. It's like in Gulliver's Travels. You have you have Gulliver, and then you have the tiny Lilliputians, and even Ethereum is a Lilliputian compared to it. And of course, Bitcoin is proven to be immutable, and it has a limited supply over time. It's not going to, like Ethereum and the others, have unlimited amounts of supply coming out. And so, look, I mean, things can go wrong with Bitcoin. It's still in its nascent form, but to me, the risks in Bitcoin compared to all the other ones combined, it's not even on the same planet. It's literally like investing in a junior miner versus investing in physical gold. So my personal investment is only in Bitcoin. And you say, well, why would some governments allow it? Well, that's the beauty of it. They can't stop Bitcoin. They pretend they can. I mean, it's kind of like with gold. They try to stop gold in every way, shape, or form. They naked short it. They put on tariffs. They threaten confiscation, all kinds of things. And in some ways, that does work, because gold is it's more difficult to procure because it's physical and needs to be shipped. But for the most part, as I was writing today, I mean, this is exactly what I'm talking about today. My Future of Money and Wealth Storage article, whereas black markets form. I mean, if you try to stop the gold market and people want it, like in India, then the black markets form and the prices go up, and the demand, and gold demand finds a way. With Bitcoin, it's even more so, because yes, it's more risky because it's brand new and there's a lot of things that can go wrong, as opposed to gold, which has been around 5,000 years. But it's impossible for governments to stop it. That's what I was writing today about. The Chinese government put on these huge capital controls on Bitcoin exchanges in January, when the price went to like almost $1,200. Well, here we are 4 months later, and the price of Chinese Bitcoin exchange Bitcoin is like $1,050, because they're not allowed to withdraw it. But guess what? The price in the rest of the world is $1,370 at an all-time high, because people find other ways to buy it. You can buy it anonymously on local Bitcoins and other kinds of ways. So governments, and not only that, governments, they understand gold after manipulating for so long. They don't even understand Bitcoin. So any of their efforts to stop it is only going to empower it further. So I think it's going to take some time. But when you start to see confidence in fiat currencies really start to go, and people are looking for alternatives, it's not going to be gold, because gold is just going to be a storage of value, like it always has been. Every gold standard in history has been destroyed by governments for the same reasons that they've destroyed fiat currency standards. They lie about how much gold they have. They clip coins. They encumber the gold they have. All kinds of things. So no one will trust them. Gold will simply be used to store value, as it has for 5,000 years. But I think it's going to be cryptocurrency that becomes money, because people are going to be so fed up with this bad money, which is basically, it's a toss-up between fiat currency and religious wars as to what has killed more people throughout history. And it's pretty darn close. And so I think, they're not going to be able to get over the religious war stuff. That'll go on forever. But with cryptocurrency, this amazing technological invention, people will be able to transact outside of governments, and it's going to cause a revolution unlike anything seen in the world.
All right. Now, speaking of which, Tony, who's watching, mentioned that what about if they just created the whole crypto ETF? And so if they end up creating some type of market for it where they can trade and manipulate and trade, I mean, ultimately they're gonna want control. People who are in the financial, running the financial market is gonna want control of that Bitcoin / whatever coin might come about. And so at that point, is there a chance that it can be rigged and manipulated? Because that's how typical things usually end up flowing.
Well, yeah, look, I mean, first of all, this was an issue 2 months ago, right? Remember the Bitcoin ETF, the Winklevoss Trust, was all set to be, the government could have approved it, the SEC, and I said there's no way they'll approve it, because if they do, that's just going to, I mean, the price would have surged and would have gained a lot of Wall Street attention, and then a lot of venture capital fund would have raced into it and only expanded its ability to grow. exponentially. And the faster it grows, the faster its adoption is going to be. And that's obviously why they didn't do it. But if they did do it, yes, that would have been the downside to them. But the upside is, yes, theoretically, they can manipulate it more because they can create a pool. Maybe they can confiscate it. If there's a pool, it's kind of like the GLD. If they ever wanted to confiscate gold, they could just confiscate what's in the GLD. And the same thing was here. They would, if people were, I should say, I don't want to be mean, but if they were dumb enough to buy the Bitcoin ETF and assume they had Bitcoin, and then it surged and the government said, well, we're going to just commandeer the ETF, well, they'll lose their funds. And of course, the other thing they could do is they could say, yes, it's eligible to be shorted and you can borrow against it. All that would do would make it more volatile. I mean, it's not going to change anything about Bitcoin. It would make it more volatile. But again, these are the kind of things we're talking about. The government, whether the government decides we're going to permit a Bitcoin ETF because we think it'll help us control it, or if they say we're not going to permit a Bitcoin ETF because it'll help us to control it, they're going to lose either way, because the fact is the Bitcoin network is not centralized. It is not controlled by anyone. Right now, the only things they're trying to figure out is how to scale it. But it's not going to be, the government, if the US government came out today, and I'm thinking of the most draconian announcement ever, and said Bitcoin is herefore illegal and you will go to jail if you transact in it, right? I mean, that's as far as they can go. They can't confiscate it because they don't even know where it is. Most of it is in these private, anonymous, encrypted wallets. But let's say they said you can't use it. Well, first of all, that would only be Americans that would do that, and the rest of the world could use it. And second of all, they couldn't get it from people because people can use it anonymously. How are you going to know who has it? And third of all, it's really just a validation of how valuable it is, which is the last thing they want to do. Because remember, there's only 300 million Americans, but 7 billion other people. So yeah, I'll bet you if they announced that, the price today would get cut in half. And you know how long it would stay down there? Probably a week, 2 weeks, and then it would move back up and hit new all-time highs, because it's like in the Matrix, like with Neo. Like once he realized how powerful he was and that Mr. Smith couldn't beat him, he just shook him off. And so the Bitcoin network is shaking off all these. We just had this big scaling debate where these we call it bad actors, these big money miners and owners came in and tried to commandeer it, and they got shaken off like like rag dolls within a matter of weeks. And so that's what scares when currencies start to really fall and there is a financial crisis. I think it's going to be cryptocurrency that's going to scare governments even more than gold, which is going to be good for gold because maybe they'll spend less time trying to hold it down.
All right, well, good point there. Now, as always, if you are interested in calling in and actually want to, ask a question directly, feel free to do so with the ID number over my shoulder, or continue to ask questions here.
I have 5 more minutes.
Okay, 5 more minutes. Okay, someone here mentioned that if it gets to the point where it gets real bad, the Fed more likely just going to print a lot of money and then buy a lot of Bitcoin and then flood the market with Bitcoin.
Great. I mean, that's another thing, because look, governments own gold right now. I mean, governments have been buying gold. The Chinese, some of them do it very overtly, like the Chinese, the Russians. Most of them don't do it overtly because they don't want to endanger their own, fiat currency regime. But unquestionably, since the 2008 crisis, governments have been net buyers of gold. Why do you think? You think it's because they think that their fiat system is superior and that everything's going to be great and the central bankers are going to save the world? No, they're scared of what's going to happen. And the same thing with Bitcoin. At some point, some government is going to announce, it'll be probably a small government, yeah, we've been buying it, and that's going to tip people off. In fact, I read today that the United Nations is doing this kind of charity thing where they're going to be sending money to people in the form of Bitcoin, so it's anonymous. And I'm going, oh my God, once you start to see institutions and government agencies use it, it's all over. So yeah, there will be a time when central banks will be printing money to buy Bitcoin. That time may be a few years from now, but I fully believe that they've been buying gold and they'll buy more gold, and at some point they'll buy Bitcoin too.
Yeah. All right. So two more words, and then we'll let you go. Next word is retirement portfolio, 401ks, IRAs. If everything pans out, the way that it seems to maybe heading, and we learn from history in nations surrounding the United States with collapses and fiat and currency meltdowns and stock market meltdowns. What would 401ks, IRAs here for those who are kind of led into that financial realm there of, having to have automatic withdrawals from their accounts and things like that? how would all that play out in the days ahead if things turn out in the worst case scenario, like, I believe you and I myself and others believe it will happen? What would it look
Right.
like for those
Well,
guys?
history shows us they'll take them. I've talked about this forever. In fact, I cashed out my IRA in 2009 when I was 39 years old because in early 2009 during the crisis they were in Congress actively debating the confiscation of IRAs, or basically commandeering them and saying you have to put them into what we tell you what to put them in, and you can only take them out under our terms. So yeah, eventually by hook or crook they're going to take them from you. Maybe it'll be because we become social states of America and we raise our tax rates to like Europe's like 60-70%, so that the value, whatever you have in the IRA, they're going to take most of it anyway. Or maybe they'll do something with it, or you'll be stuck, you're usually limited to things like stocks and bonds, which are historically overvalued, which at some point are going to, at least in real terms, dramatically lose value. So what I did is what I would advise other people to do. I mean, yeah, at Miles Franklin we offer precious metal IRAs. You can put it there, but the government could still get their hands on, that's not like owning gold, because it's owning gold in an IRA that the government could theoretically take from you. So I would advise cashing out your IRA. If you're over 59 and a half, what are you waiting for? Because you don't even have the 10% penalty. You're going to pay those taxes anyway, probably at higher rates. So I have the fear of God regarding what's going to happen to government-sponsored retirement funds, and I advise people to get away from them as soon as possible.
All right. Well, last question, and it's about the COMEX and the Shanghai Gold Exchange. And if you can see over my shoulder, I have listed a couple prices there of what the paper to dollar ratio is for gold, and so it's $800 for silver, and I can't see over my shoulder right now, but it's a couple. It's well priced in gold. Give me your thoughts as far as the days ahead. At what point will the exchange is out over in Shanghai begin to just because they deal in physical, separate from the paper stuff that we do over here on this side? And how will those prices either be real or will they exceed that?
Well, it's anyone's guess when, guys like Andrew Maguire, who, they're in that wholesale world, he claims that that's as tight as you'll ever see. And clearly the Shanghai Exchange's physical offtake has been off the charts. It's been enormous. It's been a huge reducer of the inventories, which are already as low as they've probably been in generations. So at some point, that is going to contribute to it. It's just the question of when. And look, remember, the price of gold in almost every currency in the world is either at or near an all-time high. And we're talking about the euro, the Australian, the Canadian, Mexican, the UK pound. I mean, we're talking about most of the world has seen higher prices, so it's not like it's down and everywhere. But at some point, the whole game will break, because there's just not enough physical out there to meet the demand, and that demand is only going up and that supply is only going down. So I wish I could say when. It just seems like there's way too many things going on economically, monetarily, politically, maybe militarily, going that something's not going to give soon, but I just can't tell when.
Right. Well, Andy Hoffman, I appreciate you for joining us for this live RTD live session. Wish we would have had an opportunity to have someone call in, but yet it seemed like most of the questions came on the computer, which is just as good.
Well,
so Andy,
that's the world today.
Yeah. So for those that may not know you, who will watch this later on, who come across this for the first time, give more people information on how to follow your work and how to possibly take advantage of some of the things you got going on at Miles Franklin.
Right. Again, Miles Franklin has been in business 28 years without a single registered complaint. We're one of the largest, oldest bullion dealers in the nation. I write every day for free and do podcasts like this, all for free at milesfranklin.com. And you can email me at ahoffman@milesfranklin.com.
Well, Andy, thank you once again for sitting down. Looking forward to staying in contact with you. I had some questions about, some geopolitical stuff with war, so we'll get to that on a later episode down the line. But thank you for taking time with us, and enjoy the rest of your day, buddy.
My pleasure. I'll be happy to come back soon.
Thank you.